It's Thursday, the 12th of March 2026. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Sean, 5 stories, 5 minutes. Let's go with story number 1. 2 of the 4 big banks now expect interest rates to rise next week, while professional investors are pushing up bond yields, which reflect rate expectations to their highest level in more than a decade. National Australia Bank and Westpac now expect a lift in the official cash rate both next week and in May, taking it back to 4.35%. Equal to its highest level in 13 years. That would feed through to mortgage rates and amounts charged on business loans and credit cards as well.
The shift on rates came after Reserve Bank Deputy Governor Andrew Houser said it would be bad for everyone if the central bank didn't act decisively. Bond markets now pricing in a 4 in 5 chance of a rate hike next week. Before Houser's comments, a less than 50% chance was baked in. 3-year bond yields have hit 4.49%, which suggests investors think that's the average of the cash rate over the next 3 years, much higher than where it is now. Speaking on the Conversations podcast, Houser said inflation was now expected to rise above the Reserve Bank's 4.2% forecast for June. If that's the case, the central bank is likely to take action to not only slow inflation, but also restrict inflation expectations.
Houser also noted that with oil trading at elevated levels, the highest since Russia's invasion of Ukraine in 2022, and the RBA doesn't want a repeat of the 2022-2023 scenario when the cash rate went from 0.1% to 4.35%, the fastest pace of increase ever from the central bank. He went on to say, Sean, and this is pretty clear, right? Failing to raise rates to the level they need to be and allowing inflation to get out of control is a clear problem.
Yeah, I mean, that's what you call hawkish central bank commentary. The Reserve Bank clearly wants to stamp on any further outbreak of inflation. And as NAB chief economist Sally Auld put it, senior central bank officials are inclined to view the Iranian conflict as an inflationary shock. Might be temporary, but it's still a shock. The impact of higher oil prices will flow through to the economy.
On to story number 2, you mentioned the Iranian conflict. The Australian diplomatic missions in Tel Aviv, in Abu Dhabi and Dubai have all been shut down due to threats posed by missile and drone attacks. Foreign Minister Penny Wong said the government's number one priority is keeping Australians safe.
Yeah, I mean, lots going on around the Middle East. We had Home Affairs Minister Tony Burke saying yesterday that one person from the Iranian women's soccer team who had sought asylum, she changed her mind. So we initially had 5 members, then another 2. One has asked to go home. Therefore, there are 6 people seeking asylum, or they have been granted asylum already. Tehran's experienced some of its heaviest airstrikes for a while, with electricity cut in many neighbourhoods, and the Middle East conflict, of course, hitting oil and gas prices, but also supporting the Aussie dollar. Yesterday went towards 72 US cents. It's actually at its highest level against the yen in 35 years.
Story number 3, Sean. One-time Maverick MP Matt Canavan has been elected leader of the Federal National Party, immediately calling for more Australian farming, more Australian manufacturing and more Australian jobs.
And that's pretty much the Canavan blueprint. He said we needed to go hyper-Australian for our country. We need more Australian babies, more Aussie humour, more Aussie jokes, as well as more barbecues fuelled by fossil fuels. Canavan, of course, led the push inside the National to dump its support for net zero emissions and is pro-coal. He won the ballot of 18 national MPs. He'll replace David Littleproud, who quit the top job surprisingly on Tuesday. It was at one point it was rumoured that Canavan might join Barnaby Joyce at One Nation. Yesterday, Canavan said quite the opposite. He'll be leading the fight against Labor, One Nation and the Teals. He'll target One Nation and his leader Pauline Hanson over the party's lack of substance and penchant to grow division.
Story number 4, the federal government will pump $200 million into ASX-listed cloud, cybersecurity and telecommunications company Macquarie Technology Group to help keep Australian data onshore, as well as create jobs in technology and artificial intelligence.
Macquarie Tech owns data centres that support many government agency clients, and the National Reconstruction Fund's investment aims to help the Department of Defence and others accelerate their use of sovereign cloud services and AI. Tim Ayres, the Minister for Industry and Innovation, said the investment gives Australian businesses the confidence to harness AI while making sure critical digital infrastructure and information remains onshore. Really, really important that it stays onshore. The National Reconstruction Fund, established in 2023, has a $15 billion mandate to invest in companies and projects that diversify and transform Australia's industry and economy. Macquarie Tech's Chief Executive David Tudhope, pretty happy about the whole thing. gives the company more financial flexibility, and its share price rose yesterday.
Last one, story number 5. What do you make of this one, Sean? Amazon owned Zoox. It's Zoox, right? It could be Zoox, it could be Zoox. I think it's Zoox. It wants to put a very specific kind of robotaxi on US roads. It is a robotaxi without a steering wheel, without a brake, without an accelerator, without any pedals at all. Sean, the company has asked US regulators to allow it to deploy purpose-built vehicles that do not look or drive like a traditional car.
The National Highway Traffic Safety Administration said it's seeking public comments on Zoox's, had the plural of Zoox is a hard one, Zoox's plan to deploy up to 2,500 robotaxis. If it gets the green light, it strengthens the case that robotaxi operators can move beyond retrofitting existing models towards dedicated fleets. That matters because purpose-built vehicles, cheaper to manufacture at scale, simpler to maintain, easier to optimise for passenger turnover. The question is whether the regulators can keep up with the science. We'll have to see about that one.
Indeed. All right, there we go. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 12th of March, 2026. Remember to hit follow on the podcast. That is particularly important if you're listening to us on Spotify and you're listening through the Your Daily Drive playlist. That playlist is about to disappear. It's happening next week, so please hit follow on the podcast today.
The great thing about this is all those people sick of us saying hit follow, you won't have to hear that after this week.
Yeah, we won't mention it again. As long as you hit follow today, we can stop mentioning it ever again. But do that today. And if you need the longer show, you can find Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.